I'm good, brother. I'm good, man. Financial Fridays, another day, another opportunity to share some information. So I'm feeling good. What about yourself? How's the week been?
Same, man. The week has been very, very productive. I'm going off of 2 hours of sleep. I've been reading all night last night, man. But
Saw
I
that.
feel
Yeah,
good. I feel great. It's been a very, very productive week. Just been out kind of networking and connecting with good folks, and just kind of keeping the ball moving. How about yourself? How's everything on your end?
the week has been phenomenal, man. Had a chance to, undertake some information. I'm always trying to like intake information and see if there's something that I can help out with. We were able to do started some recordings of a big project that we're working with now. There's gonna be some big things coming up, so it's been good, man. Super productive. That's one thing for sure.
Yeah, man, I'm excited to hear about it, man. I want to, I like to hear the behind the scenes information. So I'm looking forward to hearing more details on that, man. Cam was on, but his internet was choppy. So like I said,
Understood.
we're gonna keep it moving because again, we started this thing to continue to provide value to our community
Always.
here weekly. So we want to be consistent and keep our word to our folks with the Financial Friday. But before we dive into it, Rico, can you go ahead and throw out that disclaimer, man?
First and foremost, people, I want to let you guys know that this is strictly for educational and informational purposes, right? Any of the information that we review, anything that we speak on, please do your due diligence. Make sure that you seek the advice of a financial professional or fiduciary agent, and that as you find it purposeful or as you find it noteworthy, right, to do so, dive in, figure out what it is that you would like to do with your financial future. Following that, contact those people necessary, and take our advice if you want to, and add it in with that advice that you asked with them. But we just want to make sure that you guys know this is in no way we're telling you what to do with your money, right? Or telling you which way to go, which stocks to improve in. So throwing that disclaimer out there, do your due diligence.
Absolutely appreciate you, man. As always, man. I'm excited about today because I'm not normally the tech guy. You know what I mean?
All
So
good. We're gonna make it happen.
I'm gonna be sharing the screen. We'll pull up the article, have a conversation, and
All
like
good.
I said, folks, if you guys are out there watching, feel free to chime in. We would love to hear, your thoughts, alongside of ours. So, but without that, we want to be respectful of everybody's time. It's 3:04, so we're going to dive into it. 3:04 Pacific Standard Time. We're going
Let's
to dive
go.
into it. So I'm going to share my screen. I'm going to pull up the first article, and so let me know when you can see it. Give me a second, pulling it up. Um, all right. Can you see my screen?
I can't just yet.
Okay. Cool. Give me a second.
And everybody just bear with us, guys. There
I
we
got
go. Yeah, we on there, man.
on it,
Good
on
stuff,
it.
G.
Oh, hey, I'm a quick learner.
Hey,
Hey,
you knocked it out.
but Rico, I know this was your week. You selected some
Yeah.
some really really great topics, man. I actually really enjoyed reading the articles, man. But the first article we'll start off with is why there is no such thing as no landing scenario for the economy. So I want to start there. Let our viewers know like why you kind of chose this and kind of some of your takeaways, and we'll have a discussion on it.
Phenomenal. So the reason I chose this article is because as you read through it, it just lays out various scenarios based upon, right, what the Fed has been doing as far as, trying to basically create a soft grade, right, or a soft landing for the economy by increasing the rates, right? You hike up rates, and so what that does is that creates a recession, basically, right? I'm not gonna, tiptoe around it, but what they're trying to do is slow down inflation, bring the, increase those rates to slow down the inflation. The only problem with that is that the job market was still growing, right? And so you
Mm,
end up having hyperinflation because you have people being paid at increased salaries, which then they're still purchasing things at the rate of inflation, right?
right.
And so it keeps the market and keeps everything exactly where it is, and then that turns into stagflation. So some people were thinking, just based upon the job market and the way things were moving, that you know there may be a no landing, right? We won't see that drop, that huge drop that we saw in 2008. We won't see that happen. Here's the thing. We talked about it a couple of weeks ago. If you align the actual graphs from 2008 and currently where we were, they were almost neck and neck, right? It was almost like a mirror image. And so this article is just simply going through and saying, guys, if you're thinking that there'll be no landing, no, that's not necessarily true. The job market, right? This influx of the market, people coming in, billions of dollars going into the stocks daily, that's increased, right? Or it's had the stock prices jumping up a little bit. But to think that you can still continue to keep this going and sustainable, on the long haul, that's not realistic. And the reason that is because anybody that knows the economy is cyclical, right? And so during these cycles, you will always have to reset and then you're going to jump, right? So you have to reset. You got to hit that downside and then it does corrections and then the market starts growing and expanding again, right? Market cap, market volume starts to expand. That's just a part of the economy. And so to think that you can continuously stay at this rate and not ever drop, that's just not, that's not what our economy was set up to do. So the experts are just basically saying, hey, man, realize that it's going to drop eventually, right? And so just make sure that you're placing yourselves in the right position. And I chose it because a lot of people may be thinking that based upon the current stock market pricing and the way things are up right now, right? So they're like, we avoided it. We don't have to worry about it. And that's not actually what's happening.
Gotcha. Yeah, this was a very interesting read, man, because, I know, in our home, T and I, we often talk about the rise of inflation and the prices of what you're paying for goods. And it's like people are still paying the high prices. The more people, continue to pay those high prices, even for the things that they don't need, that's where now that becomes the norm. Right. And so
right.
I enjoyed this, man. And I wanted, from an education standpoint, I wanted to kind of highlight something, because there are people who are maybe watching that may not understand what a hard landing or a soft landing is, right? And so as I was kind of diving into that was one of the first things. I'm always kind of education based. Like I get it. There's some people, so I want to specify that. So hard landing versus soft landing. A hard landing, when you ask yourself the question, hey, what is that? This is generally where a recession takes place, where the Feds, right? This is kind of based off the article, where the Feds tighten so much that it creates a recession, right? A lot of unemployment goes up. We've seen that increase. We closing out 2022, looking at even 2021, the amount of people who lost their jobs, right? So that being a factor, it coming into where individuals, they cannot afford the things that they want to buy, right? The economy actually starts to slow down. So which during a hard landing, that then the Fed is actually forced to actually pivot and shift, right? And so that's kind of hard landing versus the soft landing. This is where inflation is tamed a bit. It kind of calms down. We've kind of continued to have conversations that right now the inflation is kind of a little bit of a slowed down. You've seen it kind of decrease from September, October numbers of where we were at 9.1. But again, it calming down, but perhaps not as many people need to lose their jobs as expected, right? This is a really, really impacting a lot of people in our community. I was having a conversation with a gentleman earlier today. We were just kind of small talking. I was just like, man, it's picturing myself being a part of a company. And then, I've given 13, 14, 17 years in, and then I get the call into the manager's office that I lose my job because of layoffs. Right. And so this was all going through my mind as I was reading this article, man. But I wanted to kind of, like I said, educate folks when it comes to that piece. And obviously ongoing business cycles, which is generally just kind of ongoing growth. And this was, like I said, this was definitely a dope read, man. Let me I want to bring back the article real quick just to kind of scroll down a little bit. Obviously some graphs and everything, but if you guys take some time, like Rico had mentioned, do your due diligence and make sure that you're reading, man. But this was a great read. I appreciate this pick.
I appreciate it, man. This is something I feel like applied to everybody. It's relatable, right? Mm-hmm. Because we all live and we all consume goods. The consumable goods, right, is being affected by inflation. Everything's affected by inflation, but maybe sometimes we're insulated from some of it. But the stuff that we buy, right, and the way that you live, your rent, all these various things, these are things that you see on a normal basis and things that affect you. So thought it was relatable.
Yeah, I want before we transition to the second article. Actually, I wanted to because I know even on this on our Financial Fridays, we've mentioned about Federal Reserve Powell, his name several times, and so I wanted to highlight this here that was in the article. It said Federal Reserve Powell has said as much himself. There has been an expectation that inflation will go away quickly and painfully, or painlessly. I don't think it's guaranteed. That's the base cause. He cautioned last Monday, and basically, like he said, it will take some time. And so, like I said, as I read through the article, that was something else that stood out to me because, again, you on one side you have folks who are like, "Hey, this will go by quickly." You know what I mean? I remember even being a part of that conversation when the pandemic first happened.
Right.
And then on the other side, you have the individuals that's like, "Hey, man, this might be a ride." So strap up.
Well, for sure.
Good stuff. Good stuff. Well, cool. I'm gonna bring up the second article.
Okay.
Let me know if you can see the second article now.
I believe that I can.
Okay.
No loading. Sorry, I'm on my phone here as much. Oh, no, it's still up. First one's still up.
Okay. Cool. Give me one more second. Let me pull up the second
article. All good.
Yes, man.
By the way, T, congrats on transitioning into the technological age and knocking that out, man. I see you over there. We miss Cam. We always miss Cam. Cam is always handling business, man, but he's here in spirit.
Absolutely.
He's holding us down.
Absolutely. Yeah. Let me go to the second one. This was another interesting article. I think it's loading.
All good.
Let me click the switch button.
We go.
All right. I think it's still showing. So does it say the retail investors, that one? Can you see that one?
No, we're still up with Powell. It's still showing Powell right now. All right, where we went down to.
Give me 1 second, guys. Cool. This was a very, very interesting article. But go ahead.
No, I was just going to say in the interim, while we're waiting for it to come up, man, hopefully people are sitting back and they're thinking about their placement and where they're at right now, right? And thinking about some conversations and things that they should be getting in tow and getting things aligned, right? Because planning is everything. You got to have a strategy. So hopefully you're sitting down, you're taking some notes, and every week as we come in and we have these conversations, hopefully some of the things can get you to a place where you have good conversations with your financial person.
Yes. So the second article was retail investors are pouring a record $1.5 billion per day into the stock market. Talk to me, man.
Man, so look, this kind of, if you notice, this ties into the first article, right? And the reason why people thinking that we're not going to have that landing or it's going to be, oh, it could just keep going like this. Here's the thing. It's records being broken right now. People pouring back into the stock market because in 2022, what did we have? Dude, you had such the largest hedge fund, right, or asset manager in the game is BlackRock. BlackRock took a 34% dip. Remember, we talked about that in one of the articles, right? And so people were scurrying and running away from the stock market. Now people are running right back, and even more than we're actually in originally. And so if you're looking there's graphs and everything there, but basically what this article is talking about is that people putting so much money into these markets, pouring it into ETFs, pouring it into tech stock, right? Tesla's probably leading it, and you got Microsoft, all these VR, altered reality things, these AI, because you love the AI, right? These companies are leading it, and so now what ends up happening is all this money starts to go in, but then you get right. So then the actual pricing of the stock, what happened? Over speculation starts to happen, and then and that pricing starts to hyperinflate. What I'm saying basically is the price is not appropriate for the actual value of the stock, but the money keeps going in, and so these prices rise up, and what ends up happening is that you hit an even harder floor, basically. And so this article is just reading through and telling people, like, don't judge the economy based upon what you're seeing right now, and also understand that this could have a negative effect, right? Because what ends up happening is we fall flat on our face. What ends up what is it? It's like going up a ladder, right? Mm-hmm. And you're taking step by step, and everything's good, and then you get to the top of that ladder, and then the ladder closes. Well, you're higher up when it closes, right, than you were on the first or second step if you would have failed. So obviously the fall is much greater. It's much more damaging. It's the
Right.
same mentality that's going on here, just to understand that. They had a couple of articles. They had a couple of people that they were talking to that actually are assets managers, and they were talking about how Apple and Tesla, right, the actual pricing of these, and what does that mean to the market? Well,
Right.
yeah, obviously it's great. You're making money right now, but if it's over speculated, then it drops, or it or it loses value because
Mhm.
something happens. That floor is much further down, man. So I just brought this up because I those two kind of tied together, and I just thought it was super important for people to understand that don't judge the market and don't think it's just going to continue doing what it's doing right now. We're breaking records right now. You're not going to continuously break records, right, on a monthly, on day in, day out, monthly basis. So that's where we're at.
Right.
Go ahead, G.
Yeah, it's about that, man. Like about the record breaking numbers, and that stood out to me. Something else that stood out to me, obviously Tesla, because closing out 2022, that was again a conversation we were having.
Man,
Pulling out Tesla taking a huge dip because of just some of the shenanigans.
yeah,
But with that, man, I wanted to highlight. So right, just a few months ago, Tesla was down. It says Tesla has gained 74% in 2023.
yeah,
Right. And
yeah,
so I want to ask you a question. When
sure.
it comes to your thought process on long-term investments, right? For
Hmm.
for example, let's use Tesla for example. I come in, I invest in Tesla, and my goal in the stock market, I want to play the long game. Like seeing how Tesla was a couple months ago, and then how it forecasted, and then what it's doing right now in present day. Why is it important to, I guess, kind of play if your goal is to play the long game, to a company like Tesla or to that stature? What would you say to young Rico when it comes to investments?
Yeah, so if I was, if I'm talking to myself or I'm talking to you, as a young investor, what I'll tell you is this: go with the popular stock. A lot of people will go tell you to go opposite, right? They'll tell you don't do the Nike, don't do Apple, don't do Google, don't do Microsoft, right? Don't do Tesla. No, of course you can. There's actual, right? There is actual stability, right? There's a floor, there's a built-in stability in investing in these stocks. Now, here's something to understand. Obviously, based upon the pricing of these stocks, you're not going to be buying multiple shares. Most people won't, right? Right
Right.
off the bat. You're not going to buy multiple shares because the evaluation per share is very high on these companies. But buy your portions, buy the pieces, right? Buy your fractions of that, and then put more into it on a weekly basis. Another advice that I would give is when the pricing's down like it was in 2022, that's the time to snatch up
Mhm.
Tesla and buy as much as you can. Snatch up Nikes, snatch up Nvidia, Meta, Apple, these type of companies, Microsoft as well, because the basis of what they're bringing, right? The value of those companies, they bring so much to the table. Now, if Elon didn't have SpaceX and oh my God, he got Tesla, SpaceX. He got like three or four. He got the solar company. He has like 4 or 5 different companies that are all revolutionary and are all valuable. If he didn't have those, maybe you want to think twice about when you sell. And it's always still good to know prices of when to sell, when to buy in, right? All those things. But as I look at the companies, this is the last bit of information. As I look at companies, you need to look at companies that have value. They bring a lot of value to the table, right?
Mhm.
What are they bringing to the table? And if another recession happens, are they going to lose their valuation? Are they shutting down? Would they just lose everything, or can that company move through it? And whatever product or service that they offer, can it grow during a pandemic, or is their product still going to get bought during a pandemic? And
Right.
so that's some questions, and that's a good test to look at what you do and how you do on the long term, because you're in a lifetime, you're going to experience on average 7 to 8 cyclical, right, ups and downs,
Right.
right? So can I withstand that, and do I have the time to do that? Age is very appropriate on that question as well. I'm young, right? Glenn, you're young, but if I'm 65, 70, I don't have time for that. I got to sell Tesla, right?
Right.
before I got to make my money, right? So that's what there's multiple different facets in it, but if I'm looking long term, that's what I'm looking at.
Got you. That makes sense. And I know you're a researcher too, so you're obviously looking at the 5-year trends and things like that as well.
Most definitely.
Cool. I appreciate you, man. Hopefully someone took a note.
Hope so.
All right. So I do want to say a couple of things regarding this particular article too, because it talked about Tesla, like I said, gained 74% in 2023, indexed, right? So this is, again, something else that we often talk about. Yesterday, I had the opportunity. I was at one of the Air Force bases and I was doing a financial workshop, and we were talking about the different ways that money grows and, kind of educating them to get them to understand some of the language that are being had at some of the tables that they may not have grown up to sit at, right? And so we were talking about index, right? And just in this article, it mentioned that index is up 8.2% year to date. 8.2% year to date. And so that kind of stood out to me. And then obviously, when it comes to like specific stocks, I'm a fan of NVIDIA, right? So it's obviously kind of top 5, and it mentioned about 55% growth. And so that kind of stood out to me, especially being not as seasoned as far as doing research on specific companies when it comes to the stock market. Thankfully I have a team of folks, or I'm surrounded by folks that's their game. And I could just pick their brain. But now I'm actually diving into that, just kind of based off of the information that I'm getting from my circle of people, you included, obviously, being able to look at things and forecast smart money moves. So
I mean, if you're a novice, right, or a beginner, then you definitely want to make sure that you can set it and forget it, and indexes give you the best opportunity to do that, right? Hedge your bet, for sure.
Right. Yeah, for sure. And the last article we'll bring up, I know we got 7 minutes, we will close it out. Let me share my screen. I should be a little quicker this time.
All good.
This was interesting. I mean, anything regarding Pennsylvania. So obviously, I'm from Philly. So anything regarding PA, I'd be locked in on it. So
I threw it in for you. I saw that. I knew you. Yeah.
So the title is Pennsylvania Farmer Behind $5 Trillion Trend Speaks Out. His speak out was, I created a monster. Talk to us, man.
This is no shade to anybody. I want to put that disclaimer out. I'll put another disclaimer out. This is no shade to anyone. Guys, I need you to understand. 401k was only a tax code. It was a highly hidden tax code, right? That executives and C-suite executives and people that worked in high corporate companies were utilizing to make sure they didn't have to pay taxes. Well, this farmer, right? He actually decided, and he said, you know what? Benna is his name, right? He said, everyone should be able to do this. And in comes the 401k that we know today, right? So he's sitting back now and he's saying, dude, I thought it was going to be good. I thought it was going to be something that was going to work. I created a monster, right? Mostly everybody puts their money into these things. They don't know how they work. They have no idea what's going on. Companies take advantage of people, right? They got you they're only putting in max 5%. You're putting in 20%, right? So the majority of the money being risk is yours. So he's just going through, and it's just stating, the actual history of how this thing happened. And then it's simply telling you about a 401k. Guys, you have to educate yourself, okay? Whenever someone sits and talks to you about investing, and if your thought process is, well, I'm good in retirement because I got my 401k, but you haven't looked at it in the past 2 or 3 years, that's not going to work, right? So this is just, I like this article because the actual person that went in and implemented and got the IRS to say, yeah, we're going to allow this on a widespread range, right? Which they set rules in place. We already went through that, right? On the back end, you end up paying them way more than the deferment and whatever. That's the government. It is what it is. But I just wanted to post this article because I want people to really break down and see that this is not the intentions of how it started, but this thing is morphed, right, into something where all these companies give it, but it isn't the best thing. Like he said, I created a monster. This thing's a monster now. It's out of control. If we could take it away, he's like, we shouldn't have it, right? We should have people learning about financial literacy, understanding the different vehicles and things to put your money in. How you can actually grow your income and see it growing, and you self-control it. You don't pay a fee for it, right? and then you can learn how to actually build your portfolio appropriately.
Right.
That's why I posted this, because I think so many people should read this article. Yahoo Finance is phenomenal. We always big up them. We need to get some money from them, right? They need to be giving us, need to sign us right for that deal. But no, Yahoo Finance is phenomenal because it's just in the middle of the road, independent. They don't go either which way with politics, right? They just report the information. And so this is something that people need to really read. And I'm hoping that people take some notes and start understanding that, 401k, I'm not bashing it. It's good in its place, right? If they're matching 5%, you put in 5%. I wouldn't put anything more than what the company's going to put in. But outside of that, though, don't overextend yourself and really realize what's going on in this aspect. So that's why, yeah.
No, I appreciate that. And so while we're even on the 401k talk, I want to say this, and only because I sit down with so many people, or so many clients I've sat down with over 2022 and even 23, and they're contributing to their 401ks, or they've been contributing over the last 5 years, 7 years, 15 years, and they never look at their 401k, right? And so if you're on here listening and taking notes, or I want to highlight, if you have not looked at your 401k, take a look at your statement, right? That's number one. I want you to take a look at your statement. The other thing is I want to highlight something in this article that really kind of stood out to me. Right here, I want to read this paragraph. But the idea caught on. By the mid-1980s, half of all firms either offered or were considering offering 401k plans to their workers. By the 90s, 401k plans had $384 billion in assets and 19 million active participants. Today, so not yesterday, today, 50 million Americans have 401ks. And for stock markets around the world, this is an enormous deal. And this is why I wanted to kind of highlight this. Most workers are paid every 2 weeks. So every fortnight, hundreds or thousands of dollars from 50 million American paychecks are diverted to the stock market. And so, again, more of an educational piece. Again, do your due diligence, read through the article, read the details. There are obviously sub articles to the articles. This was a really good one. Again, because so many people, again, 50 million Americans have 401ks, and probably more than half of them don't know what they have in it, or what they're contributing, right? Or if their employer is matching them or not matching them. And so this is, again, I appreciate this article because, again, it gives us another opportunity to be that voice on this platform, but to help educate folks so that they can put themselves in a position financially so that when it does come time for them to retire, they're in a better position than they would have been had they not looked at it. So
100%.
Cool. So it's 3:29 Pacific Standard Time on my time. Rico, you want to close it out, and then we can close it out and give folks back their time.
Super appreciative of everybody that joined in today. Obviously, guys, start comment us, right? Write us messages. Obviously, we love you guys being on the live. We want to answer questions, or if there are thoughts and things that you want to get out to us, you can start joining in. This thing is interactive. We want to make sure to include people. And, obviously, if you have any questions about any of the things that we talked about today, feel free to reach out to Glenn. Cameron is not here, but for Cameron or myself. And so we can get you the information necessary, right? Or at least maybe point you in the direction of somebody that can provide you with the information that you need. We really appreciate everybody. And that's all I got.
Appreciate it, Rico, man. Always grateful for your time, for hopping on, man. 30 minutes of Financial Friday. We're going to be back in place next Friday. Come back, join us, invite one or two folks. Let's have a roundtable conversation. This is stuff that I love and I'm passionate about. So with that being said, y'all have a good one.
Likewise.